You.
Uh-oh.
Just to try to
So
get
we're going to
some.
get the outtakes.
Yeah.
And who are you broadcasting to, if I might?
This is Jeremy Ward's team
Oh,
page.
wow.
Yeah.
Nice.
So we have.
Hi, Jeremy Ward team page.
We have the lovely Christina here with Kim.
Hello.
And we have Tony here. We're going to answer all of your lending questions that you may have. We know you all have burning questions, maybe about credit. What's a good down payment? What should my credit score be? So we are going to be answering all your questions. So just throw them at us here live and we'll take care of all of them.
Hey everybody, it's Tony and Christina. We're live here with you, waiting to get some questions about some lender or realtor questions are open as well. Let's get it started with like a few of like the main questions that I get as a realtor, Tony. I think the main one is, what is the interest rate?
What is the interest rate? So that is the question that I get asked most often, and that is a very variable question. It can change. And the first factor that I would throw out is your credit score. So your credit score is going to determine your options that are available to you, starting with your interest rate. So the better the credit score, the better your interest rate will be. Currently, the interest rates are rising. I don't think that's something that people are questioning. I think just yesterday the Feds raised the rates once again, and I think that now's the time to buy because they're still incredibly low. But I think my legitimate answer would be it starts with your credit. If you have a good credit score, then you will have more options and your rate will be much better.
That's so true. But you know, I'm gonna throw it back. Everyone remembers Ghostbusters.
Yes.
Remember the 19% interest rate? I'm thinking.
Oh my gosh.
You know what? 5%'s not too bad.
5% is not too bad.
I feel like that's, oh, we got some people joining us. Hey, Ray. Hey, Christy. Hey, Priscilla. Glad you guys could join in. Okay, do you guys have any questions yet popped up?
Hey Brianna, see you watching. Do you have any questions for us, Brianna?
Priscilla, Christy, Ray. Now, Ray's a realtor in Louisville.
What's up, Ray? How you doing?
He's also a fabulous hairdresser, just so everyone knows.
Really?
Yeah,
Hook me up, Ray. Come on, buddy. Help me out.
All right, well, let's go. We're waiting on questions still, but I got more. No one worry. What about, let's talk about, I get a lot of questions about my credit.
Yep.
Now, to my understanding, your credit can vary, different levels, different programs accept different rates, or different credit levels.
Sure.
That's true, correct?
It is true. The most common for low credit and just putting a loan program out there would be an FHA for as low as 580. We like 600 credit scores, to be honest. But as far as low as 580, we could get started. We could have a conversation and we can see what we could do to increase it from there. But you would qualify at that level. Again, your options wouldn't be as good as someone with, say, a 600. And then you honestly, what you need to think about is increments of 20. So I would say a good starting place would be 600. And then think about 20-point increments going to 740 or higher.
Gotcha.
Once you get to 740 from those 20-point increments, your options completely open up. And you, at that point, you're going to be starting to see the best of the best. Best loan programs, best options available to you, best interest rate available to you. And it really just works to your benefit to pay your bills, your credit cards, things on time, things that are reported to the credit bureau, because they they go and count your points every once a month or every month. They're going to go and give you points or take away points based on you being responsible and paying your bills.
Sure.
What would you say you're going to do? And that's literally what the credit and lenders and anyone, banks, are going to be looking for. Are you responsible? Are you paying off debts? Can you explain something that may have been just maybe a tough time that you went through, but you rebounded, and then you've been good ever since? So that's what they're going to be looking at, and that's going to be one of the deciding factors to say if you qualify and you will be approved.
Right, because I have a lot of people that say, I've had some trouble in my past. Where do I start? And I tell them to start with a lender, because I'm a realtor. I can show you a house. I can open a door. I can tell you if something looks a little crazy. But I'd point you in the direction of a fabulous one like Tony with the PRMI-LPK Group, because let me tell you what, he's amazing.
Oh, thank you.
Amazing. Go ahead.
Well, I just want to also add to that, knowing is half the battle. One thing that distinguishes the LPK Group, and one thing that we pride ourselves on, we're not looking for diamonds when we search for people. We will work with anyone. So if you're not ready right now, if you are 3 months away, if you are 1 month away, if you are 6 months to a year away, and you want answers and you want to be educated, you want great communication, you want service and effort, give us a call. Knowing is half the battle. A lot of people are scared to have the conversation, and I'm speaking of myself as well. I used to be afraid to know. And then once people come in and they sit for an hour with myself and some of my team members who will come in and chime in and help educate you and help give you even better options than what I could provide myself. Once you know what your next step is, then you can start to get the ball rolling.
I agree.
And it's always a lot easier. Your mind is crazy. Your mind is telling you it's impossible. Once you come in and sit, you realize it's very doable. And I'm talking about if you work hard, you go to work, you pay your bills, you just want to own a home, I can help you.
Right, and I feel like I've sent some people to you before in the past that their credit was, it was okay, need a little work, and you pointed them in the right direction. You told them how to get up their score. You told them what they would qualify for. I feel like another question I get a lot is, well, what's my payment? And I think Tony can elaborate on that. But as a realtor, I know that there's a few factors. It's how much the house cost. It's what are the taxes in the area. What is your homeowner's insurance? And again, an interest rate, which is based off your credit.
So I do want to elaborate, and I want to say, your payment is also what you're comfortable with. I know some people that could potentially get approved for a $200,000 home, and your payment is going to reflect that. Even with a good credit score, you're still going to have a nice payment. Once taxes and insurance added on, your payment will still be there, but just educating yourself, knowing the best options available, and then what you're comfortable with, we will adjust and we will work with you. So maybe you don't get as much house, and even though you're approved for more and you could really afford more, maybe you take a little less so that you can have a little bit less payment. We never want to have anyone, so to speak, house poor. We want you to be able to still live a life, still do the things that you like to do. You want to go to the movies with your significant other. You want to, eat dinner out how many other times you do per week or per month. You want to go on vacation. You don't want to be strapped for cash and have a lifestyle change just because you're a homeowner now.
Right.
So that's something to also take in consideration. I know I've heard some horror stories where people gotten approved for a certain amount and they kind of feel like they're being forced into that payment or into that house because that's what they're approved for. And at the end of the day, what we do at the LPK Group and how I work with lovely realtors such as yourself and the Jeremy Ward team is we communicate early and often to see what's most comfortable for the client. And then finally on that, communication is key. The teamwork is key, and what you're comfortable with on payment should be the most important factor in your payment.
That matters for sure. And I can speak from the realtor behalf. If you tell me your budget's $170, we're not going to go see 225s because that's not the comfortable budget you're at, and it just doesn't make sense because we can find some great homes in that price range. And we'll do our best to get that done. Oh, hey, Wes joined us, and Brenda, Carrie, Ashley.
Wes, Brenda,
hey, guys.
We have
Carrie,
Tammy Ferguson on.
Tammy, hey, Tammy.
Jeremy, do you have any questions, Tammy? We got Jeremy.
Hey! What's up, Jeremy? How are you doing? Thanks for coming
Giving
in.
out some good information today.
I'm doing my best to educate and provide answers.
Awesome.
Look, we got the owner here. Look, this is how important this is. We got the man
Let's
here.
make sure we can see that beautiful lion
Look
they
at
have
that-
there
look at that
too.
shirt.
It's an awesome logo.
Who wants a shirt? Jeremy, Jeremy might give out a shirt. You never know.
Uh-oh.
Hey, we have koozies too.
We have koozies.
Yeah.
We also
I'll
have
give some
koozies.
koozies and shirt to somebody who has some really good questions.
There you go.
So I do have one popping up.
What you got?
What type of programs do you offer for first-time home buyers?
Oh, that's a good one. I get that a lot too.
Well, there are several programs through FHA, and then there are also some through conventional loan programs. Again, we're going to talk about, and I hate to sound like a broken record, but we're going to go back to credit score being the first factor. So if you are a first-time home buyer, and for example, you have money to put down, you don't want to pay mortgage insurance, so you want to go conventional, and you want to put your 20% down on whatever the loan amount is. Obviously, you wouldn't be going FHA. You would be going conventional in a Fannie or Freddie Mac program, something competitive. But your situation would be a little bit different. In reverse, if you're going FHA and you only want to put 3.5% down, you're not really concerned about the mortgage insurance. You know that comes with FHA. I think that is also another factor. But again, it starts with the credit score and then what program that you qualify for. And I never want to say one answer. So I hate to sound like I don't want to sound like I'm dodging that, but every person's situation is unique. And at the LPK Group, what we try to do is we try to put as many educated options. And again, your story is what we're listening to and what we want to know. So what kind of payment do you want to have per month? What do you want to put down? You may have your 20%, and you may not want to put the full 20% down. You may want to use that cash for something else, and maybe put 10 or 15% down. You still may take a mortgage insurance hit on a conventional loan, but you may take a much less hit, a much less payment than you would if it was FHA and you put more down.
Ray.
So I hope that answers your question, but everyone's situation is unique. Starts with your credit score. How much do you want to put down? And then we can go from there, and we'll put hopefully 2 to 3 options there if you qualify for more than one.
I'm going to throw one out because I know a lot of people have questions about a lot of banks will say first-time homeowners 0% down. The only one that I know of that you guys offer is like the USDA program, which is the outskirt areas of like Sellersburg, parts of Sellersburg, Charlestown, Floyd Knobs, anywhere in Harrison County, and that's a 0% down payment. Now, manufacturers I know don't qualify for that, but that's a good one, don't you think?
I think that's a good one. We also have a Home Possible loan and a Home Ready loan, and those are a Freddie Mac and Fannie Mae. But we have those programs that require 3% down, 0% down. That's a USDA loan.
Yeah.
And then we also, I know people talk about monies from the Kentucky Housing Corporation that come in and help. We can't you can't speculate exactly when monies will come, but a lot of people do like to wait on those monies to help. There's some first-time programs where you can take down payment assistance through Kentucky Housing Corporation, and that's on the Kentucky side. I will do some investigating on the Indiana side, and I know we are here in Indiana, so Indiana Housing, I'm not exactly sure if they are the same on that, but I do know that there are some programs between Kentucky and Indiana that will, it could be like a second lien, and you can take a loan up to, again, Kentucky Housing between $4,500 or $6,000, depending on which one fits best for you. You'd have to qualify for the one for $4,500 through Kentucky Housing, because it only requires you to pay back at a 1% interest rate. For the $6,000 DAP, I think most people would qualify for that if they're going into that program, and that requires a 5% rate on that payment, but it is a separate loan that you will pay at the same time as you pay your mortgage. You pay it over 10 years, and you pay it back that way. And it would actually disappear from your loan, from your mortgage payment, once you pay it off in that 10 years. So that's something else to think about.
I just learned something new. I didn't know that. Yeah. So basically what I'm hearing, guys, that there's a ton of loan options, and you basically just need to get a lender. Because, again, as a realtor, I'm going to ask you if you're pre-approved before I go show you a house. And in this market right now, if you're not pre-approved looking for a home, you're going to get disappointed, because what's going to happen is people are going to take it because you're not going to get it because you didn't talk to a lender, you didn't have your pre-approval going. Hey, Michael. Hey, Brenda Lowe. Hey, Alex. Thanks for joining us, guys. You guys got any questions? Jeremy's giving away t-shirts and koozies.
So one of the issues I hear a lot is people call me and say, hey, do you have any rentals? Do you have any homes we can buy on contracts? My first question is, well, why wouldn't you buy a house?
Right.
The rates are going up a little bit, but they're still way cheaper.
Yeah, we talked about
than traditional rates. And I mean, you can literally buy a house cheaper than you can rent. I'm a landlord, so I like rental.
So I would definitely,
the rates are good.
Yeah, I would definitely agree with you there. And in that situation, you just have to realize which one you want to be. Do you want to be the person that's renting and paying off someone else, like Mr. Ward, paying off his mortgage, or would you take an opportunity to purchase or invest to purchase a rental and become the landlord, it requires work, it requires maintenance, it requires responsibility, and but what I was saying is you have to decide who you want to be. The main reason we talk about home ownership is because it is a huge investment.
Right.
It is an investment that I think history shows that is in an upward. Mm-hmm. And right now the market is very, very hot. So, I'm the type of person, and I've said this before, if I have $200 cash in my pocket and I leave, by the time I get home in the evening, I'm probably going to have about $28 or $38 because I'm not going to really know where it went. A home is an investment that over time, you don't look at it as, liquid. You look at it as something that's just gaining equity. Mm-hmm. So when you sell or when you want to take out a loan against your equity, you can do that to pay off a debt. You can do that to pay off a loan. You can do that to help with your kids' college money, all because you made an investment in a home, early. We're talking about 30-year mortgages. We're talking about 15-year mortgages. We're talking about over time gaining equity, something that you can say, you can be proud of yourself and tell your kids, hey, I did this for you so that when you got to college, we could pull from this pool and we could pay off or we can pay towards in that way.
That's great. And I've noticed that rental rates, you can almost get a house cheaper than you can rent. It is insane. People will tell me their rent's like $1,200 a month. I'm like, well, you can get like no one quote me or hold me to this, like $150,000 house, 180.
But you need to come see a lender first, because there's probably going to be 3 other people there once you get there looking at that house.
Right.
And if they have letters from a lender like our group, then they are coming stronger, so to speak. And the seller, I don't know if it's exactly equal here in Indiana, but the seller gets to choose their buyer.
And then a lot of times they'll choose, correct me if I'm wrong, Jeremy, on lender. If it's a lender that doesn't perform, we're going to look at that and we're going to go, well, they've got Tony versus, and we can't decide for our sellers, but we can say, this is our experience.
And you know what?
Hey, Curtis. My accountant's on here. I'm not doing anything wrong, Curtis. I'm not making money on this, I promise.
Hey, Curtis.
Guys, I'm going to step out.
Thanks, Jeremy.
Let me know how the questions come out. I'd like to hear some of the questions and answers.
Good deal.
Tony, thanks for coming by.
Thank you for having me.
Spend some time with us. We love working with you guys.
Thank you.
Christina always doing a great job.
Oh, thanks.
And y'all have a good afternoon.
Curtis, what questions you got? I know you have something. Adam, anything? Okay, well, I'm going to move to my next question until we get another one.
We have another one here.
What we got?
What types of costs are included in closing a home? Closing costs and upfront costs that I should be aware of.
Sure. So you always have to think about your payment, your down payment, which is either it could be the 3.5% that we talked about in an FHA loan. It could be 5% down in a conventional where it's a home ready or home possible loan, or you could be putting down your 20% so that you again skip mortgage insurance altogether and you're paying towards your principal and interest. Then you have to think about your closing costs, your taxes, your insurance that go into escrow. They require 12 months up front, and if I'm not mistaken, the taxes get paid twice a year over here in Indiana.
Indiana's a year in the rear, so it's a little.
It's a year in the rear and twice a year. So, and then over in Kentucky, it's once a year, but they bundle that up within your first payments. And so you got to think about your taxes and insurance, which is put into escrow. So your down payment, your taxes, and your insurance, and then your final closing costs on the loan. So again, every person's situation is unique, depending on the purchase price of the home and the loan amount. That's how that's figured.
So let me throw it out. I'm gonna put you on the spot.
Okay.
You ready?
Yep.
Okay. I buy a $100,000 house.
Okay.
I do an FHA loan.
Yep.
That's 3.5% down.
Yep.
So right up front, I would have to have $3,500.
Well, but you also have to have your earnest money deposit, which goes towards that.
Correct.
What that goes towards your down payment, but goes towards your closing costs.
Right.
You have to have your 3.5% down. So then you also have to have again your closing costs already. But your earnest money deposit is what I was saying. That's usually close to around $500, and that's just nothing more than your deposit and telling the seller that you're serious.
Good faith deposit.
Good faith deposit, earnest money deposit, EMD, and then you have to have your inspection money ready up front.
True.
Inspection is not
3,500.
required by, at least on the Kentucky side, it's not required by law, but it is.
Yeah.
It's required.
It's not required in
It's
Indiana.
not required in Indiana either.
About
But
3,500.
it's highly advised that you do that. Again, this is an investment, so you want to have something that you're going to invest this much money in. You want to have that, make that investment.
Sure.
So an inspection is approximately,
3 to 5.
3 to 5,
Depending on
or it could be more, depending on what exactly
Size
you
of the
want
house.
done and what you're suspecting. And then finally, you're going to have your money for your appraisal.
Yes.
And that's upon receiving the contract. So we're talking anywhere from $1,500 to $700 when you have the contract, and we're talking about sourced income. So it has to be in your account. It has to be sourceable, or it has to be something that we can say came from this account, and it has to be according to the guidelines of whatever the loan program is.
Gotcha.
So you got that money. That's money up front, and then we talk about money at closing, or cash to close.
Cash to close.
And then we start talking about the closing costs with your taxes and your insurance and
So-
things like that.
I'm going to throw it out. In my experience, closing costs can be anywhere from $15,000 to $4,000.
Yep.
$1,500 to $4,000. And I just want to say to buyers, don't let those numbers scare you. It's not impossible. We ask sellers to pay a lot of that sometimes. Your closing costs, and not your down payment. But in my understanding, like an FHA, I think you can get a gift.
You can get a gift.
Does it have to be a relative?
It does.
Family
it needs
member?
to be a relative, mother, father, somebody that's connected.
Connected,
I
not just
don't
like
think
Joe
they
off the
count
street.
cousins from. I don't think cousins is one. I think it's
Like immediate
Immediate family.
fiance kind of thing.
I can't confirm fiance.
I'm sorry.
I almost said yeah, but
Yeah, you're like,
I can't confirm fiance.
Did you see me nod my head? I was like,
Yeah, Josh, you almost got
Tony's
me.
going to give me his new car. So yeah.
right. But you can receive a gift from a family member up to $10,000, which could be used towards your
Great.
closing costs and things like that.
I didn't know it was that high.
And that money has to be sourced as well. So again, it can't be mattress money, so to speak. It has to be an account that has been established that is definitely sourceable, because it's going to get sourced.
Right.
So just
Hi,
that's
Tina.
something to
Hi,
know.
John.
Yeah.
Shout out to Kyle and David that are watching. Do you all
Hey,
have any
Kyle and
questions?
David. There's 3 phones going right now, guys. Just so you know, we're not just talking to weird people in the room. Well, maybe not now. Tina, do you have any questions? Miss Rhonda, John bought a house last year.
John, how's your house going?
He was first time home buyer last year. He got
Nice.
a cute little house.
Nice.
Cute little house. That's my Aunt Cindy on there too, Cindy Luckett. I call her Aunt Hottie because she's one day I have to look
Hey,
like her.
Cindy.
Mm-hmm.
Christina, I have a question for you.
What you got?
How much do you typically get in seller concessions?
Depends on the seller, depends on the area. I would say that I would average $3,500. That's about what we get. Now, for the highest and best situation, we're going to relook at that, but I wish a lot of houses are going that way. But we play to win, right, guys? We play to win.
Hot market right now.
It's a hot
Very
market.
competitive.
I wanted to touch on sellers too. I hear there's not a lot of houses for sale, and when we talk to sellers, they're like, "Well, I don't want to sell it before I find my dream home." Listen, I have a way. There's a way around every situation, and there's a way to sell your house and keep it in lingo long enough to find you something. I'm not going to diverge my secrets on Facebook Live, but you can call me or text message or message me, and I'll share that with you. No other agents, I'm not telling you guys. I'm telling you. Hey, Reed, how are ya? Reed just popped in. Reed, how are you?
Hi, Reed.
Again, this is Tony Williams with the LPK Group, PRMI. You guys got a lot of initials.
Can I just give one easy one to find me and to find my team?
Yes, you want to find Tony for sure.
An easy way to find us is mylendingrate.com. And if you want to find me in particular, add a /TWilliams3. Okay, so mylendingrate.com is how you get to us. And then add /TWilliams3. And that way you can go directly to me. So that's a way to get in touch with my firm and to find me directly. To go along with some of the other names that we have.
I like it.
Yeah.
This has been great. Has this been fun, guys?
It's fun to me. You almost made me sweat with the one of your questions, but and if I did not answer your question directly, because again you are unique and your situation is not going to be like anyone else's situation, call me. Go to mylendingrate.com. Ask questions.
Shout out your
dial
phone
the
number. Give your phone number.
I'll give you my cell phone number: 502-322-7737. I would love to answer your questions. If I can't get to you, it's probably because I'm speaking with someone else and trying to help them with their needs and their options. But I would love to hear from you. I would love to answer questions. Remember, I do not get paid unless you close and actually purchase a home. So the education, the communication is going to be free for you, and I will do the work. And if we decide that we want to go forward, we have what we call our I4AW process, and we put you through that, and it makes things really easy to understand. We educate you along the way. You will feel like you will leave my office and you will go through the process feeling like you know a little bit about financing, why what I do is important, what Christina does, and why the communication between she and I and realtors and myself are important in this process. With a hot market like it is right now, you want people on your side that are going to work for you. You want to be able to sleep knowing that people are working behind the scenes with your best interest at heart.
That's true, and I'm going to throw out something else about lenders that I've worked with, because a lot of people ask me the difference between, well, what's the difference between a bank and a lender? Banks are fabulous, they're amazing, but I can call Tony on Saturday at 6 p.m. and he's going to answer my phone call. Not bashing banks, because I love banks. I'm going to get beat up probably. But anyway,
Well,
but Tony will answer the phone all day long. He calls me back whenever if I don't have him, he'll call me back. He'll call me right back. It's amazing. And then we work together as a team. So just so everybody knows, like, when we use lenders, they don't pay us to use them. There's no kickbacks. We use them because we trust their judgment. We trust that it's going to close, and we trust that their communication is going to be what we need to really survive. Because again, I don't get paid too unless it closes. So we're both there from start to finish. And I'm gonna touch on that. Start to finish, from contract to close, is usually 30 to 45 days. And a lot of that will depend on the buyer getting their information to Tony or whichever lender you choose. They're going to ask for everything. And I say it like this, they're your DNA sample.
pretty much
Everything.
I mean, you're giving
Have it all
you're giving
ready.
your social, you're giving your date of birth, you're giving other pertinent information, and again, you have to have a person that you can trust, and that's another thing that we pride ourselves on. You know, we get to know you. It's about relationships. I feel like I've gotten to know Christina and her family very well. Jeremy and his team. I'm starting to get to know more and more members. It's all about relationships. It's all about finding someone you can trust. Again, it's going to work for your best interest. And we're not going to choose for you. We're going to put
Right.
options available in front of you based on your story, based on your wants and your needs, and then we're going to say, here's what we have. What do you like? How do you want us to proceed?
Mm-hmm. Yes, I agree with that. Do you have any other questions over there, guys?
Christina, do you get a lot of for sale by owners?
I do get, and they're fabulous to work with, and they're not hard to work with. It's kind of a different process. So as a realtor, if you see a for sale by owner sign, we can call them. That's not a big deal to us at all. We work with everybody and anybody. They're people too, right?
They are.
Mm-hmm.
Fizbo.
I like those bows. All right. So I think on our next Facebook Live, we will have a home inspector with us. And that'll be awesome because you can answer all kinds of questions about what they do. So join us probably next week for that. And Tony, you got anything else to add? Tony's fabulous. We're going to put up his information too on our Facebook so that you can get a hold of him. And if anybody's looking to buy or sell, obviously I'm happy to help.
We are located in Middletown in Louisville behind Mark's Feed Store. We welcome walk-ins. I'm sure there'll be someone that will help you. We would prefer that you call us and set an appointment with us, but we are here to help. We again, 4 cornerstones: communication, education, service, and effort.
I like that.
We would love to help you.
Okay, well, I'm sorry, I got one more thing. What about the pre-app process? I've heard it's fast. It's not a tedious 2-week process.
Yes, so again, I think I'm going to put the ball back into the client's hand. If I can get docs from you fairly easily, you know, your pay stubs, your bank statements, and other pertinent information that I'll need, if I could get those to you in a form that's acceptable, you know, in a timely manner, I'm putting that in the file, and I'm creating that for you as we get it. So will work as hard and as fast as you need. Some people are ready to buy this weekend. Some people aren't ready to buy to the first of the year. You know, it all depends on the person's unique story. But once I start to understand your story and I hear the sense of urgency, my energy levels will pick up with you, and I will work to help you accomplish your goals, whatever that time frame may be.
Right, because I've called Tony before on a Saturday. Probably I'm going to make up the time because I don't remember what time it was. But let's just say it was 2 o'clock. He called me back at 5 o'clock, people, and he had them pre-approved. They were ready to go. They were ready to write an offer. So it can happen really quickly. Not to put any pressure on you, but that's going to happen every time.
Call me. Put some pressure on me. Put some pressure.
Oh my gosh. All right, guys. Again, Christina McKim with Jeremy Ward Team, Ward Realty, and
Tony Williams with the LPK Group, mylendingrate.com/T Williams 3. I hope to hear from you.
bye, guys. Thanks for tuning in.